Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily, and good morning, Lawrence.
Hey, good morning. How are you?
Good to see you. All right, let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is trading at $47,607. Bitcoin is trading slightly up, almost 1% over the past 24 hours. And the CoinDesk Ether price ETX index is at $3,814. ETH is also advancing about 0.5%. The DFX CoinDesk's DeFi index is at 379 points, taking a step back about 0.8%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So we're seeing a bit of mixed results on anticipation of that Fed meeting this afternoon. Emily, what are your thoughts on what we might expect?
Well, again, Lawrence and I have, differences of opinion here. Lawrence thinks it doesn't really matter. I mean, the real question is this narrative of Bitcoin being a hedge against inflation. And that is something that some people really believe to be true. And that's some things that people say is just a myth. So I think the question is, is the Fed going to raise interest rates? And is Bitcoin actually going to react to these movements at all? Do people actually see Bitcoin as a kind of protection against the devaluation of the US dollar? That's the question. So it really depends on how you look at the role of Bitcoin.
Lawrence, you're seeing some mixed results in the crypto markets.
Yeah, I don't buy this one. Look, and this has been an argument Emily and I have had forever, and we have it off air as well. The price of Bitcoin on a day-to-day basis doesn't necessarily move on long-term views of inflation. If you break down the price of Bitcoin, it's a combination of the view of inflation. To be sure, it's a small factor of it. The other factor of it is this long-term outlook as to whether or not it's going to be adopted as a store of value and even as a medium of exchange. And right now, this narrative of, it's got to be an inflation hedge is kind of there, but that's like such a small factor that I think whatever we hear from the Fed is not gonna...
I actually agree with that point by Lawrence, by the way. I totally agree that these sort of daily price movements and interpreting them in light of the Fed is just people kind of looking for a narrative. So that part we're actually in agreement on. Yeah,
they're just grasping at straws. And like, okay, so great. You think that they're going to, hold back and taper. But I don't think it's just going to have that much of an effect on price other than a couple of thousand points here and there. So it's like big deal. And like, so that's it. Just look at the prices, and you're going to see tomorrow, or you're going to see in the next 24 hours, like a small move. It's nothing big. I think the longer term outlook we have here is whether or not we can get institutional interest into it. And right now, we're not seeing that institutional interest at the moment. We have indications in the futures market that institutions aren't that excited, at least for the time being, at least until the end of the year when it comes to Bitcoin and investing in the futures markets.
We'll be looking forward to what the Fed has to say in the afternoon. Meanwhile, we also heard from Congress on their latest stablecoin hearings, and for that, we have our spotlight guest.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So the Senate, a subcommittee, held a hearing on stablecoins, and it was a little more contentious than the last hearing.
Yeah, good morning. Yesterday, Senate Banking Committee held a hearing on stablecoins. They brought in Dante Disparte from Circle, as well as Jay Massari of Davis Polk, to talk about the potential benefits and use cases for stablecoins, and brought in Alexis Goldstein and Professor Hilary Allen to talk about the concerns they see in this industry. And it was a pretty short hearing. It was less than 2 hours long, but as you said, it was pretty contentious. There was a lot of concerns expressed about everything from consumer protections to financial stability risks to concerns that there might be a bank run on stablecoins. And some of the largest stablecoins out there right now will not be able to meet the demands should there be, more than 10% or 20% redemption requests.
Mm-hmm. In terms of critics, we do have a clip of Senator Elizabeth Warren of Massachusetts, who is probably the biggest skeptic. Let's have a listen.
Stablecoins have no regulators, no independent auditors, no guarantors, nothing. And they are propping up one of the shadiest parts of the crypto world, the place where consumers are least protected from getting scammed. Our regulators need to get serious about clamping down on these risks before it is too late.
All right. So we had a critic of from Elizabeth Warren. I wonder, how did you perceive the exchanges during the hearing, Nick?
I mean, a lot of it really was similar to what Senator Warren was saying. There were a lot of concerns expressed about, the lack of a federal regulator. And while some stablecoins are regulated at the state level, including Circle, which is one of the ones that was present yesterday and at last week's hearing, there are quite a few policymakers who are not convinced that the state framework is sufficient for something that is, as widely used as a stablecoin. So those concerns were echoed a lot. At the same time, I think when you look at what regulators have actually said about regulating stablecoins in particular, we do know that several bank regulators are taking a look at this, although it's unclear if or when we'll actually see any kind of guidelines or rulemaking. And at the state level, I imagine they're going to want to continue to protect their jurisdiction over this industry, particularly at the money transmission level.
Nick, one thing that was interesting about this hearing compared to other hearings is that it seems like the commentary broke down among partisan lines. Whether you were for stablecoins or more critical of stablecoins. It was something you observed. Can you explain what that's about? Like why, how did it break down among partisan lines and why? Like why would one party like stablecoins more than the other?
I don't think it's a matter of, liking stablecoins in particular. Yesterday, what we kind of saw was, for the most part, Democrats were expressing concerns about, as we said, consumer protections and financial stability. And on the other hand, you had Republicans like Senator Pat Toomey talking about, the potential benefits of, cryptocurrencies and blockchain technology at large and stablecoins as a bucket in this broader technological advancement. So, this is what we've seen this before. This is how a lot of these hearings have broken down in the past. A lot of the commentary around last week's House Financial Services Committee hearing was, wonder at the fact that this did not happen. So, this is kind of, if not the norm, this is at least a more familiar type of breakdown that we've seen in the past. And, right now, what's really interesting to me is that last week's hearing is, the House is controlled by the Democrats. They have a proper majority. It's not just a 50-50 split, but they only brought in CEOs from crypto companies and asked them questions about things they want to know about. Whereas this was a kind of 50-50 split. The Senate is evenly divided, and the committee brought in both skeptics and supporters of crypto, and the questions were not less substantive, but more focused on these key issues of what can go wrong, as opposed to what are you trying to do.
So let's play my favorite game from the 1980s, Kremlinology. Let's look at what did we get out of all the sparks that were flying. What does that say about what could potentially happen? I mean, we had Senator Warren say some pretty choice words about Tether, for instance.
Yeah, I imagine the scrutiny of Tether in particular is going to continue. We've been talking about this for pretty much this entire show's run. As far as whether there's going to be any legislation, whether there's going to be any follow-up, I think it's too soon to tell. I don't expect any legislation immediately. As we've said before, we're coming up on the end of the year, so time is tight. There's going to be some big priorities in the Senate, in particular the Build Back Better bill. So they have their specific priorities. next year is when we might see something. But I think this is probably just kind of an opening salvo type of hearing. I imagine there's going to be more before we get to a point where we'll hear about pending legislation or pending moves from the Senate saying, all right, well, we've looked at this and here is what we think needs to happen.
It was certainly a good jumping off point into exploring potential and drafting future legislation. And so we did have the critics, but we also had proponents. And to that, a top proponent seemed to be Dante Disparte, who's the Chief Strategy Officer and Head of Global Policy for Circle, which is the issuer of USDC coin. And I mean, he did a very passionate job of illustrating the reasons that stablecoin innovation should be encouraged in the United States. We have a clip. Let's have a listen.
The advent of stablecoins, or what we like to refer to as dollar digital currencies like USDC, are an important innovation, enabling greater control over how we send, spend, save, and secure our money. To define a stablecoin, noting that like money itself, not all of these innovations are created equal, is tantamount to the moment we converted our compact discs into MP3s. The CD and music is still yours, but now enjoys the powers of programmability, user control, and a digitally native form factor that works anywhere on any device across the planet.
Right. And he also made a point that if the United States decides to ban stablecoins or cryptocurrencies, or, that innovation will still proliferate in other parts of the world, and that innovation will carry on with or without the United States. So I'm curious, Nick, where do we go from here?
I think, again, it's going to really depend on how the lawmakers decide to move forward. The stablecoin issuers are going to keep doing their thing. Dante Disparte noted that Circle's in the progress of trying to go public, so they're actually probably more tightly engaged with the SEC than your typical stablecoin issuer might be. But at this point, I really think that regardless of what stablecoin issuers decide to do, whether or not they decide to become perhaps more transparent about what the reserves look like, whether or not they undergo audits and publish those, I think really the lawmakers are going to come to their own conclusions about what they would like to see and try and either write letters to the appropriate regulators, whether that's the Treasury Department, whether that's the SEC or CFTC, or they're going to at some point just come together and say, okay, well, here is legislation we're introducing. We're going to try and get this passed, and we're going to try and get the president to sign this.
All right. Well, Nick, thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Coming up, checking in on Asia and diving into decentralized autonomous organizations, DAOs.
Hi, I'm Jen Sanasi, co-founder of Streambed and co-host of The Hash. You're watching CoinDesk TV.
Decentralized autonomous organizations, or DAOs, are democratic, mission-driven crowds that derive power in numbers online to accomplish whatever goals they set out to achieve. As part of CoinDesk's Culture Week, Matt Leising, Bloomberg journalist, co-founder of DeCential Media, and author of Out of the Ether, talks about the projects employing the DAO structure, which these days range from buying an NBA basketball team to increasing the wealth of women to buying a copy of the U.S. Constitution. Please welcome Matt Leising. Hello there, Matt. So perhaps we can start off with, maybe you can explain what a DAO is and how they have evolved over the years.
Sure. Good morning, and thanks for having me. As you said, DAOs are a collection of people who basically have, it's a different way of organizing human beings. It's more of a flat sort of structure. There's no CEO or like C-suite executives. It's meant to be, kind of everybody has a vote and a say in what the DAO mission is about. Usually they will sort of, as people do in real life, people will gravitate towards things that they like to do. Maybe that's writing code or marketing or sort of like community building. So usually in a big DAO, you will see sort of subgroups form, and there's examples of that all throughout crypto. And they got their start. The DAO got its start famously in 2016 when there was the DAO was created to try to raise money for Ethereum startups. It, of course, was hacked and led to the hard fork in Ethereum back in the late summer of 2016.
Well, it's so interesting to see how they have evolved over time. And in your article that you've written for us, I mean, you go into, one of my favorite stories, Constitution DAO, which is just a group of people who about 2 weeks before an auction at Sotheby's, I believe, they were about to auction off the U.S. Constitution, a copy of it. They got together, they raised something like almost $47 million to try to win that document, but they lost to Ken Griffin, who's a hedge fund manager, founder of Citadel. And it kind of reminded me, of the tension between traditional legacy finance and this new digital finance. But in this case, traditional finance won. So what do you make of the whole situation?
Well, first thing, never go into an auction letting everyone know how much money you have. You don't want to do that. He could have, Ken Griffin could have bet or paid $1 more for the Constitution. I'm not sure we'll ever know that. But the other thing that was fascinating was just the global reach and the speed with which Constitution DAO was able to kind of get up and going. It was a very clear, obvious mission. We're going to buy a copy of the Constitution. Here's, our ETH address. Send your ETH if you want to help. I think it was really kind of breathtaking and very interesting, and shows the network effect that people often talk about in crypto. This was global. People often say, well, why can't you just do, a GoFundMe? Well, a GoFundMe is centralized, and they could have shut something like this down if they didn't approve of it. I'm also not quite sure how global in reach GoFundMe is. With a DAO, it's uncensorable. You can do pretty much whatever you want, unless, you can break the law. I mean, it's kind of like, it's really up to you about what you want to do. And then it's got a global reach. And of course, it's crypto native, so everybody's already got their ETH or whatever you might want to contribute to the treasury, and so you can see something like a crowd fund of $47 million in a matter of days, which is to me just astonishing.
Matt, just to switch topics here for a moment, you also have opined about how the mainstream media doesn't really get crypto, and that's a really interesting topic. So, can you just explain what you mean by that?
Yeah, sure. I think it's come out of, I've been covering crypto for more than 6 years now, since 2015. And I've gone through a couple of the cycles here, booms and busts. And I think, there was a time a few years ago where it did seem, and I think I've asked this of a lot of people, and there's general agreement that there was a time when people were not sure that, like Ethereum was going to kind of make it, and that, the bigger picture vision was going to succeed. That obviously didn't happen. And what I found fascinating, and as I wrote about, was that what people did is, they didn't pay attention to the price. They just kept building the things that they wanted to build and kept making this future that they wanted to see. And so, out of those doldrums of the crypto winter, we got DeFi summer with collateralized lending. We'd already had ICOs, which were a new peer-to-peer way of raising capital. The DAOs are now making a comeback. You've got a lot of other DeFi applications that are testing the boundaries of remaking sort of like organizations and social, institutions in a decentralized peer-to-peer fashion. And so then once that all came back around, a lot of skeptics, I think, kind of came back and almost had a hardened opinion about what was going on, and that, this thing, it's back again. This was a scam in 2017, and it's a scam now. And I guess I'm just kind of sick of it. I think people need to educate themselves and figure out that this is not going away. I think you saw some of that with what Elizabeth Warren was saying yesterday in the Senate. There's a lot of education that needs to be done here, both in the media and in Washington, because this industry is not going away. It is creating an alternative to a lot of the traditional ways that we think about organizing and transacting. And I guess it's just sort of like, if you're still sort of just burying your head in the sand and saying that this is all going to just come crashing down at any moment, I don't really have time for that anymore.
Matt, just to follow up on that, can you give us a couple specific examples of a take that the media got wrong about crypto? Like what would be a headline or what, just to expand on that a little further?
Yeah, I think, at my old employer, there's a lot of skepticism about it. There's still a lot of attention paid to how prices are up or down, without much understanding of the underlying technology and what is actually being achieved. I think the Financial Times is sort of rather famous for its really skeptical opinion of crypto from the get-go. I think they've slowly come around in the last maybe year or so, but are still miles away from understanding this technology. And I think that's the main point that I have here, is that not enough mainstream journalists and editors are taking the time to learn about the technology, and so that they can understand it and write more informed articles, and also know when somebody might be trying to pull one over on them.
So Matt, you for many years you were also the go-to writer for stablecoins. You had incredible coverage on that. It was a must-read for everybody. What is your view of stablecoins now, and how has it changed over the past few years since you started covering it?
I think there are still a lot of questions. I wish we had much better visibility into Tether and what they're doing. I find it fascinating that the market doesn't seem to care and still values Tether at $1, even though for the most part from the outside, it's hard to say that it really is one-to-one backed with assets. I do know institutional investors who use Tether, and I know how that works, and I've spoken to them, and I've spoken to many different institutional investors that are moving hundreds of millions of dollars around, and so there's that side of Tether, and then there's the retail side of it for smaller traders. I think they work in very different ways. I think the proliferation of stablecoins is really interesting. I think some of the collateralized stablecoins worry me a little bit when you've got a basket of other crypto that's backing the stablecoin. I'd much prefer harder assets like treasuries or cash to be in a bank account, because that's where you can get kind of feedback loops, and you're never sure about what's going to happen with liquidations and things like that. But my feelings haven't really changed. I find it a really interesting and integral part of crypto, and I think it makes perfect sense why you'd want to have something like this. And I'm still I'm still confident that the U.S. government is going to eventually issue a digital dollar, and then I think that would be that as far as I can tell in terms of stablecoins. So yeah, I mean, maybe not. I think there's a room for a lot of different stablecoins and different approaches. A digital dollar would certainly add to that sort of mix, and so. Again, like my main point, I think it's here to stay, and I think it's something that was created because it's necessary.
To follow up, do you think that the fact that stablecoins are opaque is actually kind of a feature and not a bug? And do you think that that's also causing inflated prices right now in crypto in general? Because so much of crypto is traded against stablecoins that it may be inflating the prices for the time being?
That's a tough question. I'm not sure. I mean, I'm always for more transparency. That's what I would love to see. The books opened a lot more across the board. In terms of whether it's an inflationary effect on crypto in general, I'm not really sure about that, to be honest.
All right, Matt. Well, folks, I encourage you to check out CoinDesk.com to read some of Matt's articles, latest contributions on DAOs, as well as what the media gets wrong. That was author and journalist Matt Leising. Food, travel, art and music, NFTs, the metaverse, and more. It's all part of this week's CoinDesk Culture Week series. Visit CoinDesk.com/culture-week as new articles and videos are added all week long. All right, time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, December 15th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Could nostalgia be set to drive a new trend in NFTs? Well, if the Astro Boy collection sale is anything to go by, the answer to that question is yes. We're going to take a look at that and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, China's clampdown on crypto mining shows no sign of letting up. The country's anti-corruption watchdog has revealed that IP addresses related to 78 state-owned entities were actually among almost 4,700 addresses found to have been involved with mining in Zhejiang province in July. Now, local authorities have since seized 68 mining machines and penalized 48 people, 21 of whom worked at state-owned entities or Communist Party agencies. Meanwhile, Hong Kong-based venture accelerator Brink has secured $130 million in a funding round led by Animoca Brands, also Hong Kong-based. Brink says the capital will further fuel its expansion into Web 3.0, including the launch of blockchain-focused accelerator programs across culture, collectibles, decentralized finance, that's DeFi of course, and data. You can find out those stories and more at forecast.news. Does this little human cyborg bring back any memories? Well, Astro Boy, or the Mighty Atom, is one of the most acclaimed Japanese manga series by legendary artist Osamu Tezuka, first published back in 1952. And now the man himself has become an NFT project with a collection of artwork selling out in just under an hour. Forecast News' Danny Park reports.
The NFT series named From the Fragments of Tezuka Osamu kicked off a two-part sale with its generative art NFT, featuring randomly generated original manuscripts from the Astro Boy manga. The NFTs, priced at 0.08 Ethereum each, went on sale earlier this week. However, while the sale was set to last for 7 days, all 1,000 collectibles sold out within an hour. Meanwhile, another sign of the nostalgic NFT project's popularity came when its official Twitter account had to warn collectors over fake NFTs being sold on the OpenSea marketplace. The second part of the sale has now begun, featuring a unique Astro Boy digital mosaic created from 4,000 of the manga's manuscripts. That auction runs on OpenSea until Saturday. For Forecast News, I'm Danny Park.
Well, you might have just missed your chance to be Snoop Dogg's neighbor, at least in the virtual world, as someone dropped $450,000 to buy a piece of land next to the rapper's NFT house in the Sandbox. Real estate is a hot commodity in the metaverse, but will demand continue? Let's get to our very own NFT insider, Duke Liu of Spores Network, to find out. Wonderful to see you again, Duke. I think we all need a virtual land broker here. Is that a thing now? Because virtual land sales are through the roof. Over $100 million spent on land NFTs in the Sandbox and DeCential in the last week of November alone. Is this just the beginning? I mean, what makes this such a hot buy?
Land is land, whether it's physical land or virtual land. And what we're seeing now is what I had predicted when I wanted to enter this market, which is it's no longer just about the currency. It's no longer just about liquidity. It's about real goods, real spaces, real virtual land for us to occupy.
Yeah, we're definitely seeing the real and virtual world merge. Adrian Cheng, notable here, one of Hong Kong's biggest property investors, has now ventured into the metaverse. What do you think of that?
The move into this space makes sense for someone like him. He's a third generation family money. The first generation would never have invested in this asset. They're busy building physical buildings across Asia. The second generation, probably ho-hum. And then this third generation is trying to make a play, right? They're trying to differentiate themselves.
Always love the look from the inside from our NFT insider, Duke. Thank you again for joining us today. And thank you guys. That was the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading right now at 40. We've got, first of all, we'll have our markets update after the break.
Hi, I'm Christine Lee.
Zach Seward.
I'm Michael Casey.
I'm Christy Harkin.
I'm Isaiah Jackson.
I'm Serena Lin.
Hey, this is Will Foxley.
I'm Teresa Santos.
Hi, I'm Lawrence Lewitton.
Hi, I'm Doreen Wang.
I'm Nikhilesh Day.
Hi, I'm Kevin Worth.
My name is Naomi Brockwell.
I'm Jordan Muthra.
Hi, I'm Galen Moore.
Hi, I'm Brad Count.
I'm Pete Paschal.
Hi, I'm Jen Sanasi.
You're watching.
And you're watching CoinDesk TV.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Getting ahead of myself. All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is trading at $47,497. Bitcoin is up almost 1% over the past 24 hours, and the CoinDesk Ether price ETX index is down slightly, about 0.2%, trading at $3,788. Taking a look at the DFX, CoinDesk's DeFi index is also taking a step back, about 0.7%, trading at 380 points. Joining us now to discuss the crypto markets is Edan Yago, leading contributor at Bitcoin-focused DeFi project Sovryn. Hello there, Edan. So taking a look at Bitcoin, again, we're seeing some mixed results in the crypto markets ahead of this Fed meeting. What is your take on Bitcoin?
Oh, sorry, I was on mute. I was getting ahead of myself as well. Look, the big picture around Bitcoin hasn't changed. We still have a situation where if you buy treasuries, if you buy government bonds, you're losing money. We have a situation where inflation is still necessary to continue because otherwise governments, and particularly the US government, would be too indebted and too much money would need to be spent paying back debt every single year. But at the same time, the Fed is looking to calm the waters right now and provide a sense of reduced cash flows going forward. And that means trying to reduce inflation and trying to reduce the amount of money that they're pushing into the economy. And so that makes people feel like maybe assets that are further out in the risk curve, like tech and like cryptocurrencies, are maybe going to be less valuable in the ensuing months. So there's been something of a pullback as the market waits to see what's happening.
Edan, thanks for coming on. One question I have is you've said that the American public that Americans are starting to seek alternatives to banking by going into crypto. But is it really that, or are they actually just trying to take on extra risk to meet some of their payments, so to speak, because of inflation? In other words, they're taking on this trading risk by trading into crypto because inflation is kicking in and they got bills to pay.
Well, I think they're basically the same thing, right? You're taking on additional risk because whether you're a company or you're an individual, right? Whether you're a millennial who's trying to pay back the debts that you have for going to school, or you're trying to pay back your house, we all are facing the same problem, which is that it's we have the money that we have is worth less and less. There are no simple ways of earning funds anymore. It used to be the case that you could keep your money in a bank and earn interest at a decent level year after year. That's no longer available to us. And so the primary function of savings that banks used to provide, as well as borrowing and lending in the way that they used to provide it, is no longer available. The system itself has stopped functioning in the traditional sense of banking. And today, no one looks to the market for interest rates. Everyone is looking to central governments, central banks for those interest rates. The market signal is dead.
And how do you see decentralized finance playing into this? Are folks using it more and more? How do you see it interacting with the traditional banking system?
Well, the remarkable thing about decentralized finance is that because decentralized finance is independent of the traditional financial system, controlled by the same regulators and the same central banks we were just discussing, it actually does still have a live market signal, right? The pricing, while speculative, is real. And so the opportunities to trade, to try and observe opportunities for yield, those are more risky, right? They're not centrally controlled, but they're far more organic. And in that respect, it represents a stark contrast to the rest of the market, where, people recognize that the stock market is going to go up purely based on the decisions that the Federal Reserve make. And so today, for example, there was a hearing where there was an attempt, or there are attempts to being made to try and bring, for example, stablecoins into the fold of the regulated space, because they do actually represent a true alternative. Now, I actually think that for banks, this is a real opportunity, because the banks themselves are struggling in this environment, just like everyone else is. Banks were invented and existed for most of their history in an environment of a live, real market, where interest rates were competitive, with the result of the competition between banks. And so I actually think that they're very well placed to position themselves for the market that's going to come and be brought to us by Bitcoin and Web3, which is going to be a live market again.
Edan, this sounds like a great future, except one thing that persists is that, particularly with smaller businesses and individuals, having a relationship with the bank, sometimes, of course, there are horrible stories of banks foreclosing, but there are also stories of people having a long-term relationship with their banker, and the banker going easy on them when they miss a payment, or helping them out with getting a loan when they might not necessarily meet some of the criteria up front. What gets lost there? I mean, won't that get lost in this new world where everything is done through decentralized finance? That personal relationship and the discretion that the banks can wield over their over their lending policies, doesn't that get lost? Doesn't that eventually even hurt the smaller borrowers and smaller businesses?
I think exactly the opposite. Today, what you're describing doesn't exist really at any bank, except if you're one of the ultra wealthy, right? The ultra wealthy truly do get personalized banking.
That's not true. I mean, there are, look, I've run small businesses, and I wouldn't say I'm the ultra wealthy. I know a lot of people who run small businesses. We have a lot of small minority owned businesses that go to banks and need help, and it's not necessarily. It's DeFi won't necessarily take into account all sorts of things about communities and about the individual trying to get ahead or just trying to keep afloat. that what you're describing it sounds like a soundbite, and it's great, but in many ways, a lot of small banks throughout the country have personal relationships with their smaller borrowers. And I'm talking about people borrowing small amounts of money just to get a store open downtown.
Yes, that's exactly right. I think that's totally true what you're saying, and it's credit unions as well. But what we've been seeing over the last few decades is the disappearance of small local banks and the disappearance of credit unions, and more centralization, right? As this, as banking across the world, and particularly in the US, consolidates. Right, the number of banks that exist in the US today is roughly half of the number of banks that existed in the US just over a decade ago. And so personalized banking is going away with it. But I think that DeFi is the path to bringing it back, because once the infrastructure, the financial infrastructure, is available to everyone on a level playing field, as a business, as a bank, right, as any financial business, the only differentiator you have is the type of service that you're able to provide to your customer, the type of guidance you can provide them, or your ability to tie them to a wider community of which they can be part. And so, we're seeing this happen in the form of DAOs, but we're also seeing this happen in the form of centralized companies that are providing interfaces into the crypto and DeFi world and are competing on the type of service that they're able to provide. So in that respect, I think what you want to do is you want to have a level playing field in terms of the settlement layer, the infrastructure, the base interest rates, which is not manipulable, and which doesn't provide particular advantages, to those who are closest to the regulator. And that allows for many entrepreneurs and companies to flourish in a highly competitive environment of providing the most important person, the customer, the end user, with the most competitive service.
All right. Well, it's an interesting conversation, and we'll see what the future holds for banking with centralized finance as more and more people go online to Web3. Edan Yago, thank you so much for joining us. He is the lead contributor at Sovryn. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee, and I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.